Afternoon. I hope your year has been blessed so far. This is your financial professional, Monique May, helping you become financially literate with a spiritual perspective. And I'm going to start with sharing how our company helps do that. Okay. Well, we ensure no family. There's three ways we ensure no family is left behind. Okay. One, we offer access to a wide range of life insurance solutions, among other things. And the standard for our insurance providers is an A rating. Okay. And you can check that provider rating at those places, spots there. Okay. Two, we help simplify complex choices so families feel confident. Three, we guide people through big decisions with care and clarity. Okay. And we also do this for individuals and business owners. Now, what does the Bible say about planning and making sure your finances are in order? Because we sometimes feel like we are just to leave it to chance and trust God, blindly trust God for everything. And yes, we're to trust God. But one scripture that I want to share in particular is Proverbs chapter 27, verse 23. Be thou diligent to know the state of thy flocks and look well to thy herd. Now, to give you a little bit of backstory, in biblical times, most of people accumulated wealth through the flocks rather, and herds and cattle and whatever that they owned. And so that's the cultural context for this verse. And so to bring it forward to our times, most people don't plan to fail, but they fail to plan. And so that's why we need to learn how to plan effectively. And that's why I'm here to help you in that area. Um, Now, there's a popular concept out there, buy term and invest the difference. And term insurance is not bad. It can be good for certain purposes. It just depends on what's suitable for you. So, what I'm going to address is term insurance versus cash value um, slash index universal life, which is a form of permanent insurance. So basically, term versus permanent insurance. Now, there's, like I said, it has to do with suitability. Um, Now, some of the key tip differences is coverage duration. Term insurance provides coverage for a specific period, usually ranging from 10 to 30 years. And if the insured passes away during this term, the beneficiaries receive the death benefit. If the term expires before the insured passes away, they're still alive, in other words, there's no payout. Permanent insurance offers lifelong coverage as long as the premiums are paid, and this type of insurance doesn't expire, um, which ensures that a death benefit will be repaid um, regardless of when the insured died, as long as the payments hadn't lapsed and the policy hadn't lapsed. So now, another key difference is the cost. Term insurance generally has lower premiums um, compared to permanent insurance, making it more affordable option for those seeking substantial coverage without the high cost. And permanent insurance, the premiums are higher due to the lifelong coverage and the cash value component. Um, Kind of like you're paying for what you get. So you get what you pay for, type of a thing. And this type of insurance is often used for long-term financial planning and can be more suitable for individuals with a high budget. Okay. Um, and then there's the cash value component. Term insurance doesn't accumulate cash value. It's purely a death benefit. If that's all you need or want insurance for, then that's suitable for you. Permanent insurance includes a cash value component that grows over time, allowing the policyholders to borrow against it or withdraw funds. And this cash value grows tax deferred, providing additional financial flexibility. For example, during the Great Depression, when banks, businesses, and government sectors closed their doors during the Great Depression, life insurance companies remained virtually unscathed. And I said that to say this, while the market suffered loss, the owners of cash value insurance didn't lose a dime. And this saved a lot of companies. Some of them you probably heard of. Well, all of them, most of them, a lot of them you've heard of, probably all that I'm going to give you examples of. Um, for example, J.C. Penney. Um, Mr. J.C. Penney had accumulated a massive wealth inside of his cash value life insurance policies. And so he was able to borrow against them to help the company stay afloat. Otherwise, we would have never heard of J.C. Penney because they probably would have went out of business back then because that saved them from closing the doors. And because that depression almost wiped him out otherwise. Then there was Walt Disney. We've heard of Walt Disney and Disneyland and all of that. Um, he had been stockpiling money into his cash value life insurance policies. And so when he could not get help from lenders, um, he provided his own finances to get his amusement park started up. And a year later, after he did that, there were 3.5 million people visiting those parks. See how much of a difference that made for him. Then the next one that you're familiar with, McDonald's. Ray Kroc, that started McDonald's, he relied heavily on cash value life insurance to store money, and this played a major role in getting the company off the ground. And we it's one of the largest fast food um, um, places that we've heard. They have McDonald's everywhere. Yeah. Um, Then there is Max and Verta Foster, um, the couple that founded Foster Farms. They borrowed against their life insurance policies to invest in 80-acre farms in California to produce the chickens that we buy out of the store now, the Foster Farm chickens and things we buy out of the stores. They did that with their cash value life insurance. Then there's Stanford University. We've heard of Stanford. There's a couple that started Stanford University, Leland and James Stanford, they started that university after they lost their son to typhoid fever, and they focused on that. Now, after her husband, Leland Stanford rather, passed away, they hit some financial struggles because she had um, a life insurance policy. She used those proceeds to help the school stay afloat. Now, that is the one instance where a term insurance would have been a good thing, wouldn't have been a bad thing because he passed away and she was able to get it because he passed away. So the point is that life insurance policy helped her and it helped her continue the operations and pay faculty and weather another 6 years of financial distress. So, so just those just are few examples of major examples where having that cash value insurance change history, I guess you could say. Now, back to what I was saying about those differences. Now, flexibility. Now, term insurance, depending on what policy and what company you got it through, they can be converted to permanent insurance without a medical exam, and that's will provide you some flexibility with your needs. So you can start off with the term because it's cheaper if that's what you need to do, and then you can convert it to permanent later on. Again, that depends on what company, because all providers don't offer that. So, yeah, and then with permanent insurance, it offers various types, like I mentioned before: whole life, universal life, index universal life. If you the difference between universal and index universal is tied to the market to a certain degree. And each of these have different features and benefits. So again, it depends on what's suitable for you. And these different features and benefits allow for customization based on individual financial goals. Um, I mean, it just depends on what's right for you. I mean, choose term insurance if you need affordable coverage for a specific period, um, such as to cover a mortgage or provide for dependents until they're financially independent, if that's where your need is. Choose permanent insurance if you want lifelong coverage and the ability to build cash value, because the thing with buy term and invest, the difference where you invest is usually tied to the market. And some people are not in a position where that they can um, weigh the losses of the market. They can um, sustain through the losses of the market. So they need something with some safety. Okay? And that has to be taken into consideration, whether or not they're risk averse or not. Okay. Permanent life insurance policy also enjoy favorable tax treatment. So that is a place to put your money if you're looking for a vehicle where you will get tax advantages. Okay. Some money can also be withdrawn from the policy without taxation. Okay. And of course, there's some specifications, stipulations rather, that need to be taken into consideration. And the other thing is, if you can't afford a long-term care standalone policy with some permanent insurances, you can add a long-term care rider um, to some specific permanent policies in lieu of a long-term care policy. So there's a lot you can do. So um, and I kind of gave a general overview because it's not a one size fit all thing. I'm going to put my contact information, which will include my calendar link, so that you can schedule a one-on-one with me rather, to get more specific information. We can start with our free financial needs analysis and go from there. Um, God bless you. Have a blessed rest of your day and a great weekend.